Imagine having your own money tree in your backyard, and you have this money tree and it just throws you off $100 bills. Just keeps growing these $100 bills and these gold bars and these silver bars, and they just keep falling. I always had a fascination with that as a kid. Like, imagine having your own personal money tree in your backyard that just threw off money all the time, right? Well, there are certain stocks in the stock market that are basically money tree stocks. These are easy money stocks. They almost are too good to be true because they go up almost every single year. Outside of major crashes of the market, they go up almost every single year. They're very low stress stocks. You don't have to worry about them going bankrupt or going under or any of the stress you have to deal with in many other stocks, right? And so I want to take you through in this video many of these companies so you guys are aware of these ones because they're just easy money and they're going to be very easy money over the next 5-10 years. And if you want to just hold some stocks that you're just going to be able to make money in almost every single year outside of major crashes, these are the sorts of stocks I'm about to take you through in this video here today, folks, okay? I need one favor from you and one favor only, okay? I'm a little under the weather today recording this video for you guys. All I need from you is hit the thumbs up button, smash the thumbs up button, hit it like a fairy, do whatever you have to do, but make that thumbs up button glow. That's all I ask. I appreciate y'all for being here. If you want to subscribe to the channel, it's free to do so. 6.9 thousand new subscribers on the channel in the past 28 days. Appreciate y'all. And I also appreciate everybody that ever leaves me a nice message. I don't think I mentioned this much ever, but you know, I always see a lot of positive comments in the comment section on YouTube, and I try to heart as many of those and get a lot of nice DMs on Instagram and see stuff like this on X. Somebody posted this, Joshua posted this. I just wanted to thank you. I started listening to you a few years ago, even joined your private group. I knew nothing about stocks, just hit $100,000, and I'm just a server at a restaurant. So, yeah, that's amazing. I said, that's awesome, Joshua. First 100K of many more to come. So, yeah, I love seeing stuff like that. So I appreciate all the kind words you guys always have to say. And congrats to all you guys hitting milestones out there. That's big. If you want to access all my course curriculums and apply to join my private group like Joshua, just know I always, in the description area of all my videos, I have a link down there if you're looking to apply, join my private group and get access to all those course curriculums and things like that, right? Additionally, I want to let you guys know, only literally a couple days left here, last chance to get the grandfathered price if you want to join my Patreon. I'll put that as pinned comment down there today. Prices are about to go up 30% on November 1st. For those two main tiers, the $25 tier and the $125 tier. So yeah, last chance will be Halloween to get in. Once again, that will be pinned comment down there, and you get access to see the stocks I'm buying and selling each week, access to that particular Discord chat, access to the 5-figure award club, as well as the Hall of Fame there. And then if this tier has also access to my Become Master of Stock Market course, okay? Alrighty guys, so let's get into this. First off, new all-time highs in the public account, $2.55 million on Friday. I love seeing that, man. Big, 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 big. There's a stock I hold in there that's a very easy money stock. You want to know what it is? It might not be the one you're thinking of. It's this stock. Amazon. Amazing Zon. You want to talk about an easy money stock to hold for the next many years? This, I thought, would be the first perfect example of an easy money stock. If you want to build your portfolio around a stock, Amazon's definitely a contender to be one of the best stocks you could build a portfolio around, in terms of a low stress stock that's going to go up almost every single year outside of like a major crash in the market or something crazy like that, right? So Amazon so far, we're up $84,000 on the stock. It's just small gains from what I believe the stock's going to go up over the coming years, okay? Now what I'm showing you right now is the past 10 years of historical performance for Amazon stock. And what you're going to find is something very interesting here. Only one down year in the past 10 years for Amazon stock. And that was 2022, a year in which the NASDAQ got decimated. From basically the peak of Q4 2021 through the trough of Q4 2022, the NASDAQ fell something like, it was around 37, 38%, right? Very freak year for the NASDAQ to ever get hit like that. That was one of the hardest hit years we've ever seen in terms of NASDAQ. Only time period I could think bigger than that was the great financial crisis in the tech bubble. And so we had a freak situation where Amazon stock got hammered that particular year. And it was a great buying opportunity if you were buying shares like I was in the back half of 2022. But the moral of the story is one down year out of 10. But look at this. 4 of the 10 years were not just like up years. They were insane up years, right? 117% gain in 2015. 56% gain in 2017. 76% gain in 2020. 80% gain in 2023, right? And then all the other years are positive as well. So one down year out of 10 and 4 absolute banger years out of 10. I like the odds of that, right? Now, when it comes to Amazon, it was interesting. I was looking back at their 2003 annual report. Yeah, way back in 2003. And I was looking at some of their numbers they were doing back then. Remember, this is already after the tech bubble had popped. This is when people started to recognize these companies. It's like, oh, okay, the ones that made it through the tech bubble bursting are going to actually make it to the other side, all those sorts of things, right? I was look at Amazon's revenue in 2003. It was $5.2 billion, right? Which was a huge number, by the way, in its day. Like, that was a crazy number to be doing e-commerce wise. Massive, right? Looking at their 2023, their latest annual report, right? Check this out. Their revenue was $574 billion. They over 100x'd their revenue in that 20-year span. That is just incredible to see that, right? Now, when it comes to Amazon, here's what's interesting about this. If you look at their e-commerce market share, they're a little under 40%. Now, when it comes to their e-commerce side of the business, which is one of three core businesses for them, Amazon owns a ton of different businesses, but there's really three core businesses. The e-commerce business has a huge moat around it, and that moat is increasing. And the reason they have such a big moat around their e-commerce business, and the reason you can't really compete with it, is they have reached such a scale, and they have invested in that business for 30 years practically now, right? Almost 30 years. Non-stop. And so it's created this moat around the business where you can't compete with them when it comes to the scale of the amount of sellers and third-party sellers they have on it, right? The pricing they offer on Amazon, the delivery capabilities, right? And being able to receive your packages in a very short amount of time. They keep cutting that time down. I mean, it's very commonplace that now you can get many packages delivered within 24 hours, which is just insane, right? And they're really the first to make it, you know, huge into like 2-day delivery. And now is a lot of things I'll order and it's like it's here within 24 hours. I might be here at my house within 12 hours of me ordering it, which is just crazy to think about, right? And so that business has an increasing moat, and you don't have enough money to invest to be able to build out what Amazon has there. And it has a brand name of, like, everybody knows Amazon. Like, you live in any of the developed world, you know Amazon. Like, you're thinking about, I need to order a 12-pack of AA batteries. Amazon. Let me go on Amazon. Let me go on my phone real quick and order this, right? And that's just a moat you can't compete with. And so that's why their market share there is so high, and it's going to remain extraordinarily high for, honestly, probably decades to go in the future, right? Now, when it comes to AWS, this is a second of their three core businesses. AWS has stiff competition. And the reason being is they have to compete. You know, in e-commerce, they were able to take over that so easily because they didn't have to compete with any big tech companies, right? All the big tech companies, they tried little stuff here and there, but even they weren't willing to invest the way Amazon was willing to invest in e-commerce, right? And so they just kind of got out there in front of everybody by a mile. But when it comes to cloud, they have to compete against big dogs. They compete against Microsoft, which is Azure, right? They compete against Google with Google Cloud. They compete against Salesforce, IBM, Oracle. They compete against all the big tech companies. So it's a much tougher fight. And obviously the Microsoft fight is the toughest one of the bunch. But with that being said, despite that, they still have a 30% plus market share. I believe the latest quarter was around 32% market share in cloud. And so that business will end up being a very stable business, and I think it's going to be way more profitable than it even is today. Today, you look at the cloud business and you think of it as very big profits. I don't think this is really the huge profit days. I think that's coming over this next 5-10 years. And the reason being is we've been in a market share battle, right? Google's trying to get their market share, Azure is trying to get theirs, right? AWS, and so pricing can be very competitive. Think of it as Uber and Lyft back in the day, right? Uber and Lyft, when they were competing over market share, the pricing was very competitive with those two companies. Now, they're not as focused on market share. They kind of have their market shares, and now they're like, let's start making money from this business, right? And so when I look at the cloud business, I think that's what's going to transform over the next 5-10 years. I think these companies are going to get much more focused on, here's our market share, we're roughly in this range, it is what it is. We can fight over this market share and lose all profitability, or we can just focus on making money. What do we want to do? And that's where it comes in with making money, right? Now, the third core business, this is a very important business, and I mean extremely important because you're talking about huge margins with this business. That is their advertising business. And their advertising business has been, honestly, just going up like a rocket ship, okay? Check this out. If we go back to 2020, Q3 of 2020, their advertising revenue was a little under $5 billion. This upcoming quarter, they're going to report likely advertising revenue of $14 billion plus, somewhere around there roughly, right? Which is just extraordinary, because that's in just a few years span. To go from less than 5 billion to around 14 billion likely, right? That's extraordinary. And this business is straight profit for them. Straight profit business when it comes to advertising. We know advertising is a holy grail. How do you think Meta became a $2 billion market cap and Google became so big? Advertising, right? It's so profitable. And Amazon's just making bank on advertising. And honestly, the growth rates have been extraordinary from that business overall, right? Now, what's interesting when you look at Amazon is on a forward P basis and 2-year forward P basis, this is actually trading very cheap compared to where Amazon usually trades at. Forward P at 39, 2-year forward P at 30. Keep in mind, don't be surprised if Amazon ends up being way more profitable than analysts estimate here. So maybe the 2-year forward P is like a 25, 27 here. But that's way too cheap for Amazon. This is way too cheap for Amazon, right? Now, check out the revenue, trailing 12-month revenue of Amazon over time. And tell me what companies, what area of the market does that look like? That to me looks like a SaaS play, does it not? Software as a service. And SaaS plays get the highest PE ratios. Many times those companies are always trading at PEs over 30. Many SaaS companies trading at PEs 35, 40, 50, 60, 70. Like, they're the holy grail business models because they're usually very sticky. They're usually B2B heavy, right? And it's just the ultimate business models, right? And you look at Amazon's revenue over time, it kind of looks like a SaaS play on a trailing 12-month basis, doesn't it? It's just stable, goes up and up and up and up and up. It's beautiful, right? Now, additionally, the company's flooded with free cash flow. Look at the trailing 12-month free cash flow in this company, right? Remember, when you're talking about free cash flow, you're taking out CapEx here. And still their free cash flow is absolutely extraordinary. Now look at their operating cash flow. Oh my gosh, they've blown this number up to way over $100 billion in operating cash flow in this company. That's crazy. Look at the operating income of this company, right? Look at the operating income. On a trailing 12-month basis, they've now done $54 billion on a trailing 12-month basis in operating income. But here's the best part. I estimate, based upon my estimates I've done for Amazon, I estimate that Amazon's going to do between $75 billion and $100 billion in operating income in the next 12-month span. In the next 12-month span. That's incredible, okay? And so keep in mind, Amazon is still somewhat early in their real profitable story. Like people weren't even thinking about Amazon as a big profit company 5-10 years ago. They're still actually kind of early days. I would call them kind of like they're in either the second inning or the third inning of their profitability cycle. Let that sink in for a moment. So when we're talking about doing $75 to $100 billion of operating income in the next 12 months, imagine where they're going to be at 5 years out, 7 years out, 10 years out when it comes to those numbers. Just ridiculous. Now, additionally, shareholder equity continues to boom for the company. Now $236 billion in shareholder equity at Amazon. That's just going to continue to go up here. Now, when it comes to Amazon, I ran some numbers here, and you can begin to understand why this company is just such an easy money stock over the coming years. My numbers are fairly conservative here. I ran them at revenue growth of 12% a year on average from 2025 to 2028. That's not crazy at all. Very doable for Amazon. 12%, right? I ran that at net income growth of 20%. Not crazy at all. That gets them to net income margins of 10% come 2028. Both those are very doable numbers. You could talk to most bullish analysts and they'll tell you, oh yeah, that's very doable numbers for Amazon over the coming years, right? You value them at somewhere between a PE of 35 to 45, which if it's Amazon growing at 12% top line, 20% bottom line on average, 35 to 45 is very fair value for the stock, right? That puts the stock price somewhere between $339 and $436. And remember, it's a $187 stock here today, right? That gives you a compounding annual growth rate around 16% on the low end and 23% on the high end for a low stress stock, an easy money stock. That's the best part. You get a great return profile, but it's like you don't have to worry about like, oh, is Amazon going to go under? Like, oh my gosh, like, whoa, is Amazon going to be disrupted by this other? No, it's Amazon, man. They're just absolutely incredible company. Now they're about to report earnings here. They're one of many companies that are about to report earnings, right? So you might say, well, is this stock a buy before earnings? Absolutely, it's a buy before earnings. You might say, is it a buy after earnings? Yes, it's a buy after earnings. It doesn't matter what happens on earnings. Stock goes down to 180, buy. Stock goes up to 200, buy. It doesn't matter. what happens to the stock price after earnings? It's a buy before the earnings come out. It's a buy after the earnings come out. It's just a question of, are you going to get a bigger discount after earnings? I don't know. I wouldn't necessarily bet against it, right? But also keep in mind, Amazon stock's a buy this entire decade. So also keep that in mind, right? Absolutely incredible. So Amazon absolutely is a easy money stock, low stress. You got an incredible management team in place at that company, right? And remember, Amazon does business all over the globe. So as global net worth grows, right? As countries get more successful, as you know, the middle class continues to be built up in country after country, Amazon's going to be one of the biggest direct beneficiaries of that around the globe, right? Because they are a global company. They're just about everywhere you want to be outside of really China. They really don't have much for business in China at all. But outside of China, everywhere else, net worth grows. People are doing better over time. Middle class rises in these other countries. Amazon benefits from that. It's not like a lot of times, because I live in the United States, a lot of my viewership, I think 60% of my viewers live in the United States, right? A lot of us just think about Amazon as this United States company, and it is, but they also benefit from around the globe expansion. And they've been spending aggressively outside of the United States of America and outside of Europe, right? And a lot of that spending does not pay off right now in terms of the profits, but it's meant to pay off 5 years out, 10 years out when it comes to profits, for Amazon. So just keep that in mind as well. All right, guys, next stock up here this is probably the most controversial of all these stocks I'm going to take you through here today. It's SoFi Technologies. I actually believe SoFi is going to turn into an easy money stock, right? And that's pretty crazy to make that case for SoFi becoming an easy money stock, because this is a stock that's been anything but easy money. It's been a drama show. This stock has been nothing but a drama show since its IPO, right? Because after that, you had Rona, you had obviously the student loan forbearance, you had, the company's numbers be up and down all over the place, you had them losing a lot of money, then they're flipping to profitability. It's a drama show, right? So far, I'm up 54% on the stock, up $14,000. I think it's a very small amount from what I'm going to be up years from now, right? And I think this actually turns into a stable uptrending stock in 2025 and after. And let me take you through, okay? So what I'm showing you here is SoFi's revenue growth over time on a trailing 12-month basis. So this company is one of those companies that has great, stable growth. Quarter after quarter, year after year, right? Attracting more and more members, and that's phenomenal. But additionally, now that they've flipped over to profitability, it takes a lot of the drama out of the stock in terms of like, well, how big's the losses, right? Now the debate around SoFi is how big's the EPS? How big's the profits? That's a whole different ballgame. Additionally, I believe this company is starting to be understood better. I don't think a lot of people understood SoFi and its opportunity, really, just to be quite frank, in the past. And I believe as the company's gotten much more established now, people are beginning to understand this company on a much higher level. And when I say people, I'm not just talking about retail investors. I'm talking about big money. I'm talking about Wall Street, okay? So that's phenomenal. Additionally here, you've got to understand this around SoFi. SoFi has a mini Palantir cult-like shareholder base that's formed around this stock. So Palantir is obviously a stock that's done tremendous. I put $49,000 in a stock and I've got gains of $200,000 plus now, right? Palantir's got a phenomenal shareholder base. It's got a lot of people like me that are just really focused on the next decade in regards to Palantir. And, we're just not interested in selling. Like, I could have sold Palantir at a 50% gain, a 20% gain, a 75% gain. Could have sold at a 100% gain and a 200% gain, a 300% gain, a 4%, and I just don't care. I love holding that company. The growth rates are phenomenal at it. Profitability continues to go up, and I'm just not interested. Like, maybe someday I'll be interested in selling some Palantir shares, but it's just not today, right? That is a type of shareholder base you want around a stock. That's a type of shareholder base that has started to build out around SoFi finally, right? You after you go through sometimes a very tumultuous, drama-filled period, you shake out all the weak hands and you build a shareholder base that's stronger than ever. Tesla, I think, is always the best example of building out just an unbelievable shareholder base at that company, right? I think Amazon actually has been a great example of that. Imagine going through the tech bubble holding Amazon stock when the stock price fell 90%, peak to trough, right? That's pretty dramatic. That built up a very cult-like shareholder base around Amazon back in those days, right? Now this is 20, 25 years ago. You don't ever hear from these people, by the way. Do you ever hear from the people that were the cult-like Amazon shareholders? No, because you know why? They're out on their freaking yacht. They don't have time to be doing all this crap, okay? They're having way too much fun. They're way too freaking rich now, okay? No different than a lot of the people that were holding Tesla shares in the early days and still hold those shares today. A lot of those people, you don't even hear from them much online because they've made so much money, it's ridiculous. That they're more focused on how do I even spend all this money I got, right? And so a lot of times you don't hear those stories. Apple built a very cult-like shareholder base back in the day when it went through its drama back in the the late 90s, right? And then into the early 2000s. You don't hear from those shareholders. I mean, a lot of those folks now are in their 50s and 60s, and they're just, they got the mansion in Newport Beach, just living the life, okay? And so, now we have this like Tesla shareholder base, this Palantir shareholder base, it's a cult like, and honestly, SoFi's been through it now. Whereas people have been, it's shaken out all the weak hands in regards to SoFi, and only you got the strong hands. There's people that believe SoFi is going to be a financial giant. What does it mean to be a financial giant? To be a financial giant means your market capitalization is in the hundreds of billions of dollars. The hundreds of billions of dollars. That's where people believe SoFi is going. I think they have the potential to get there over the next 10, 20 years. And if they do, they will have a market capitalization in the hundreds of billions of dollars, right? Just like the other financial giants do today. And currently the market cap, is 10, 11 billion, whatever. It's a very small number. And so I think that's going to provide stability for SoFi as well, right? Now, SoFi was one of the 3 stocks I mentioned in this video right here, okay? 3 high potential stocks to turn 1,000 into 1 million. That video there, it's gotten a lot of views there. It's a banger title, I got to say that. It was one of the 3 stocks featured. So if you want to learn more about SoFi, I think I dedicated 10 minutes to talking just in depth about SoFi in that particular video. You can check out that, okay? So yeah, that's definitely my most viewed video I have, other than this one right here, 7 millionaire maker stocks with unlimited upside. Alrighty, let's talk about a gentleman that in his life, he's had nothing but unlimited upside. And that gentleman and his stock is Warren Buffett, right? Warren Buffett. His company, Berkshire Hathaway, is an easy money stock. It's an easy money stock. Now, when thinking about Warren Buffett's company, which, by the way, Warren Buffett's 94 years old now at this point in time, man. It's just an investing legend. Still been incredibly with it in his 90s. Absolutely shocking. I mean, just, crazy. But anyways, when it comes to his company, think about it in 3 parts. Remember I told you think about Amazon in 3 parts. Think about his e-commerce, AWS, and advertising. Think about Berkshire Hathaway in 3 parts. The first part you got to think about Berkshire Hathaway is its investment portfolio, which is a massive $300+ billion investment portfolio, with investments in Apple and American Express, Bank of America, Coca-Cola, Chevron, Occidental Petroleum, Moody's, Kraft Heinz, Chubb, all these massive companies, right? Visa, look at Visa. It's less than 1% of their portfolio, and they have $2.3 billion. Imagine having less than 1% of your portfolio was $2.3 billion. That's just ridiculous to think about, right? But the moral of the story, first part you got to consider around Berkshire is investment portfolio. The second piece you got to consider around Berkshire is its massive cash pile. Now, this massive cash pile produces incredible profits because you can put that money into treasuries, which are still yielding 4 or 5% around there, right? Which is phenomenal. It also allows the company to have incredible optionality over these coming years. They can do a lot of things with that money. They can buy other massive companies. They can do massive share buybacks. If we ever get some sort of epic crash in the market, right, in the next few years, they have incredible amount of money to buy the dip with, right, and get stocks at, 30, 40, 50% discounts all over the place. There's so much optionality there. It gives so much protection to the business model, such incredible protection of the business model, right? And so when you're considering Berkshire Hathaway, consider that as point number 2. Now, the third part to consider around Berkshire Hathaway is a company owns outright so many different businesses as well, right? And so think of it as kind of like an owned portfolio. And so like an Apple, they might hold it for a few years and then sell some shares. Same thing with like a Bank of America or American Express. These companies are more like, huge ownership positions for Berkshire, right? So Burlington Northern Santa Fe, which is a huge railroad operator, Duracell, Fruit of the Loom, Geico, Kraft Heinz, Lubrizol, Pilot Travel Centers, right? Pilot Flying J, See's Candies. I mean, you just go through the list here. You can pause the video if you want to just look at their owned portfolio. It's ridiculous. Ridiculous, their own portfolio. I didn't realize how many diamond companies they own. Ben Brinch Jewelers, which is fairly popular. Hillsberg Diamonds. I was just like, was fascinated by that whole situation. And then they even own like a popular home furnishing store out here in Vegas, RC Willey. I didn't even know they owned RC Willey. I was like, dang, man, you learn something new every day, right? So when it comes to Berkshire, it actually has a really attractive return profile. I did some very, very conservative numbers on Berkshire. I ran them at a revenue growth of 5% a year, okay, from 2025 to 2028. Nothing crazy. Like, okay, 5%. Put me to sleep. And I ran them at 5% net income growth. Also, a super put me to sleep number, because you got to keep in mind, Berkshire Hathaway, as their portfolio grows over the years, that makes their net income go up, right? Even though I don't think it should be that way. It's the way it has to be done in GAAP accounting principles nowadays. Berkshire is probably going to buy a ton of their own stock back over the coming years. So I don't think it's crazy to imagine 5% net income growth on average from 2025 to 2028, right? That keeps their net income margins at the same. We're not even getting an uplift in net income margins. Put it at a 20 to 25 PE, which is fair for Berkshire given the protection of the business model. And if you're growing top line 5%, bottom line 5%, 2025 is fair. Look at, you get a compounded annual growth rate of 13% on the low end and 19% on the high end. At just those sleepy, put me to sleep numbers. Now, if you just tweak those up a little bit, let's say they get net income growth of 7% on average over from 2025 to 2028. That's not a crazy number to imagine, considering they're probably going to buy back a ton of shares. And also remember that portfolio they own of stocks, right? Remember, many of those companies, if not the majority of those companies, remember, these companies are paying out Berkshire dividends. Huge sums of dividends. Like ridiculous sums of money. I mean, imagine how much Berkshire is getting just in dividends from Apple, American Express, Bank of America, and Coca-Cola alone. Don't even go through the rest of the portfolio. That's billions and billions and billions of dollars of dividends received per year. I think it was an estimate I saw recently about Berkshire Hathaway is estimated to earn something like $6 or $7 billion in dividends over the next year, just from the companies they own here. I just think about that for a moment, right? And so to run these numbers, that's not crazy numbers at all. That's very sleepy numbers, and it still gives you a great return profile, and you can sleep well at night. You don't have to stress about, oh my gosh, what's this company going to do? It's freaking Berkshire Hathaway. It's a behemoth. It's interesting, right? Fourth of these stocks up here is PayPal. So PayPal is a very interesting stock. I think this stock's about to turn into an easy money stock over the coming years. This stock went from a beast to a hated stock to now it's transforming into an easy money stock, right? So far I've made $59,000 on the stock. It's done me pretty well so far. I think it's a small amount from what I'm going to make over the coming years. But if we look, prior to the big crash that PayPal had, right, which the big crash in PayPal started in the fourth quarter of 2021 and went to the first quarter of 2024. That was the big crash, right? And that's when PayPal became a very hated stock during that time period because people were just losing money. Everything's changed, right? Now PayPal is known as like, oh, it's a money maker, right? If you've been buying PayPal pretty much in the last year, you should have made a lot of money on this stock, right? But if we look at the 5-year period prior to that, the stock went up over 600% in 5 years, right? Significantly outperforming the Qs, significantly outperforming the S&P 500. The Qs are up 231% over that time, S&P 500 up 108% over that time, and you have PayPal with a 600% plus gain, right? So PayPal has shown in the past it can be a beast stock, and it's about to turn into an easy money stock now, right? Now, when it comes to PayPal, I ran some valuations on 1000xstocks.com, right? Easy numbers. 9% revenue growth on average, 11% net income growth on average. Very doable numbers. I don't think that's going to be a problem at all for them. I think there's more risk to the upside in this scenario than the downside, in my personal opinion. I ran them at a PE at 2025, which is extremely fair for a company that's grown 9% top line on average per year and 11% bottom line. Like 2025 is extremely fair valuation, right? That puts them at a compound annual growth rate of 11% on the low end, 18% on the high end. With those sleepy numbers, net income growth could average in the 15 to 20% range from 2025 to 2028. Like 11% might be way low in my estimate. And so just keep in mind, even with these sleepy numbers, the opportunity is immense. I mean, absolutely immense in regards to PayPal, right? So yeah, PayPal definitely fits the criteria of an easy money stock. They got several different business lines. Alex Chriss is innovating at the company faster than ever. I think the biggest question for PayPal, is it going to be an easy money stock that goes up, let's call it 20-30% a year over the next 5 years and get you, a great return profile? Or is it going to have a beast period where it goes up 500-600% over the next 5 years? That's my biggest question. I'm banking on the get me 20% type return per year over the next 5 years. That's what I think is realistic. But I can't rule this out, because if Alex Chriss keeps this innovation cycle going, he's got going with the company, for the stock to go up 500+% over the next 5 years wouldn't be crazy to imagine, just to be honest, okay? Next one of these easy money stocks. You might think this one could not be an easy money stock. It's gone up so much, there's no way it could still be easy money, right? It's still easy money. That is Meta stock. Meta stock, sitting on $772,000 in gains on this stock, and it's still easy money. Still. Just because a lot of people get the false assumption in the stock market, and it's usually an uneducated kind of assumption. Stock price is up a lot, therefore that doesn't mean it's going to go up. It means it's either going to crash. It's got to crash, right? Because the stock price got up a lot. No, that doesn't mean that at all. Many of the guess what the greatest stocks in the stock market do? They go up, and they go up, and they go up some more, and they go up some more, and more, and more, and more. And that's how you get stocks that have a 10,000% return over time, 50,000%, 100,000%, several 100,000%, right? When it comes to Meta, this is still easy money. Here's some easy projections for you. Easy peasy, lemon squeezy. I ran the company at a 12% revenue growth rate. Very doable number, not a stretch at all for the company. 12% on average, 2025 to 2028. I ran them a net income growth of 15%. Put me to sleep. This would be bad for Meta. 15% net income growth on average from 2025 to 2028. Let me be very crystal clear. That would be a bad number. I ran them at a bad number. P ratio 20 to 35, which is extremely fair for a company growing 12% top line, 15% bottom line. 2025 very fair. That puts a stock price in 2028 somewhere between $932 and $1,305, which gives you a compound annual growth rate on the low end of about 13%, on the high end 23%. Yeah, Meta, very easy money stock. And I know it's gone up a lot. It's irrelevant. It's irrelevant in the end. And if we want to play a game of, has it gone up that much? Look at where it peaked in 2021. It was $300+, and now it's $500-something. If we want to play this game of like cherry picking, well, it's gone up so much, I could look at that time period and be like, it hasn't actually gone up that much, right? So you can always play that game. But the moral of the story is, Meta's still easy money. It's going to be a lot of money to be made in the stock over the next few years. Meta was actually one of the stocks I featured in this video right here. Did a video 5 days ago on the channel called Top 7 Dividend Stocks to Buy. Millionaires will be made. Meta was one of the stocks, and the reason being is Meta has so much room to up their dividend over this next 5-10 years, it's going to be ridiculous. The dividends you're collecting from Meta stock today are like nothing compared to the dividends you'll be collecting from Meta 3 years out, 5 years out, 7 years out, 10 years out in regards to that stock. And so, yeah, that video went in depth. That was just one of the 7 stocks featured in that video. So, and that dividend is also going to give the stock more stability over the coming years. Okay. Hope you guys enjoyed today's video. I appreciate y'all joining me. If you want to join my Patreon before the prices go up 30%, do so today. That will be pinned. Comment down there, and you get access to see the stocks I'm buying and selling each week. Access to that Discord chat over there, and then this particular tier has access to the Become Master Stock Market course. Much love, and have a great day.